Welcome, Auvorians, new subscribers, to the Tuesday midweek software strategy session call. I am Steve Vetterl, the firm's CMA, risk manager. Hopefully, we don't have too many risky times coming up, but wanted to welcome everyone. I know we got a lot of new subscribers. Got a lot of great things going on, guys. Variable live version 4 ready to go. Tell everybody. So the weekly software insights screen you should see. Let me just open up the chat window as well. Make sure we can see the screen. You guys can hear me okay. If you could just put something real quick in the chat window, that'd be awesome. Good morning, good afternoon, good evening around the world. Okay. So these are the times for the speakers. I'm going to go into risk disclosure next. If you have not, just sort of raise your hand and I can show the screen to you guys a little bit later, but I want to make sure we get everybody really ingrained into these times. If you need to put it in your calendar, your Google Calendar, let's switch over to the risk disclosure. So trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can have an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade a foreign exchange market, any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, risk tolerance, and the potential loss of investment account. So please don't trade with money you cannot afford to lose. I cannot stress that more. Okay. So if you're sharing any of your results with any of the softwares, I guess I should probably update this screen and put the other 5 on there. None of the company is recommended settings, so we don't have any recommended settings. We're not a financial advisory firm. We just license software that you can use however you want. It comes out of the box with settings which you can change. Some software more so than others. It also has with currencies that can be switched around to different pairs, some more so than others. That's kind of my goal, at least from a macro perspective in the beginning, to kind of help you guide through, the markets and what's going on, which I'll get into real quick next. So Auvoria Prime has nothing to do with a customer's brokerage account. We don't solicit or take investments. We don't recommend any brokers. There are plenty of good ones out there. Please ask your up and down line. I can promise you there's somebody's got a really good firm up there. Do keep in mind with the brokers, as long as you're running version 4 of variable, this isn't really a variable type, but there is risk in not making sure you have the most updated software, right? So make sure that you are going to and getting the current software. So let's switch out here. Let's close this down, reshare the screen to Forex Calendar, which is where I always start off next. So this is the Forex Calendar. I know some of you got some questions about this. So it's just forexfactory.com. Make sure your week is the current week. You can go forward and backwards on this. I just do a quick update, remove the orange and yellow folder events. Not as important. Red folder is really, in my opinion, what matters, just the bottom line stuff. And you can see once you click apply what's going on. So the Bank of Canada has an event tomorrow I'd be aware of if you're trading CAD related pairs. Same thing with the euro. We have a press conference on Thursday. But honestly, guys, all eyes, damn near every developed market on this globe is the election next Tuesday. So get out and vote if you're a U.S. resident. I highly recommend anybody that does any high level of complaining about the right or the left, go out and vote. So what are we going to be doing in the next 2 weeks? So I suggest that instead of doing a lot of trading, because there's a lot more unpredictability, let's just go into the markets here. Typically, although surprisingly, usually before an election, we're seeing more volatility in equity markets. This is the S&P 500 chart. Each of these days represents one candle. We've had a little bit of a sell-off yesterday, lifted back up off the support line. You guys can should be able to see here for those that trade equities. I always recommend taking a look at what's going on some of the biggest markets first. They will and will not be correlated with currencies depending on any given time. But looking at just the S&P 500 just real quickly, it's kind of where we are. Another doji, lots of doji candles. These are indecision types, and more than likely, I think a lot of global trading markets, including Forex, are going to be in sort of a holding pattern, right? So just envision a plane up there circling before landing. So that's the DAW. Let's take a look at the DXY next. This is a daily chart, tradingview.com. Great stuff. I actually been adding in some built-in stuff. This was actually developed by Dasan, this indicator. It's called a squeeze zone. And I've added the squeeze zone to the chart as I continue to build some education. I'll add a few extra things to charts. It just helps put support and resistance lines in frame, and understanding a little more. I'm going to overlay some other stuff into this coming up. But this is the US dollar. Switch over to the euro. You see not much going on. You know, so we've been in a very tight range for quite some time. This is very typical going into any kind of election cycle, really in any country, especially if it's a big one. You usually see markets start to cool out. The concern I have and what I posted on my Telegram channel, I actually made the point to go at every one of the big team leaders directly and make sure they got that. And the developers, by the way. I spoke to Bill and Riley for Einstein and Alexander. They will not be trading next week. Neither will I. So if you have a profit, if you're coming into Wednesday of this week, even if you're the best manual trader and or you have, you know, some of our semi or fully automated systems trading for you, just make sure that you take a close look at what's going on. You know, obviously, if you're in not that significant amount of drawdown, you know, let's say $500 for $5,000 as an example, coming into the end of this week, I probably would take the loss and get out. Okay. So, or just leave those trades on to manage themselves, especially if we get any wild moves into the following week. Maybe slightly better advice for the more risk averse, meaning you can handle more of the volatility for the stuff that's on as active trades, but don't have anything new being put on, if that makes sense. So if you need some clarification on that, feel free to ask questions. Please be as detailed as possible and do ask questions in the Q&A window, which I'm actually opening right now. All right, so this is, so I would think that if you guys really haven't taken the time to communicate to your up and down line, especially if you guys got some stragglers on your team, know that, you know, maybe they're busy with work, family, or they're traveling or what have you. And who knows, they could be climbing the Himalayan mountain range, right? Just make sure you communicate to whoever of what's going on next week. You know, my heart goes out to those that have, you know, suffered through the pandemic and, you know, had some losses in the family. We you know, certainly don't want to hear of any of that, but our condolences, as I've gotten a couple emails related to that recently. So I just want to throw a shout out to some of the subscribers who've been suffering through this, but pretty sure a vaccine's coming around the corner. So that could certainly weigh on markets. It certainly does add some risk. Anytime you have a spike in cases, but in all fairness to just being on the risk discussion, not claiming any sort of agenda or any narrative, you know, the more that you test in anything, the more you're going to find of positive cases. So many countries have had a spike in cases, but they've also had an absolute rocket up in testing. So let your heart not be troubled on that front. It's the mortality rate that's been dropping that's the most important factor. So, and I keep a close tabs on that because it certainly could send currency markets into a tailspin if something creeps up on us and it's an unknown that hits the markets. Essentially, my role as risk manager for all you guys in the Forex markets, but also my clients on the equity and bond sides of the markets. You know, I'm always looking at a lot of these crazy factors that could come up and slap us all in the face. and our portfolio. So it's important to kind of keep tabs on it. You know, if it's something just as simple as taking a quick glance for 15 or 20 minutes at my Tuesday and Saturday calls, at least you'll have an overview of what's going on. It may not be the best predictor, as I often try not to predict the future other than just predicting volatility. So we've had many weeks that we've had these systems off, or I should say that I recommended having systems off. And one week I actually got really lucky with, because I was traveling in the spring, the system was off and we didn't get clobbered. So, and I don't really care. I mean, the thing is that I always try to educate students, clients, subscribers, you guys, that you've got to think like an institutional manager, right? So if you're running a $40 million fund, which would be very small in hedge fund land, and you're diversified in all different areas, you're constantly looking out for risk factors, right? You get a team of people helping you out. But you want to always have expectations of what's going on. So with some of the changes that will be made to newer software that's being released, or revisions that come out with current software, what we're trying to do is make it as foolproof as possible. But none of this software, and I repeat, none of it, is a set it and forget it. You cannot just turn on this software and come back in 2 or 3 years to a pot of gold. Okay. I think it's going to require some augmentation. So that in the form of whether you're choosing the right currency pairs to trade for the next week or 2 weeks. And, Dasan sort of started to guide us in his thinking of how he lays out a chart formation and what he's looking for to accept shorts versus longs. I've never gotten that detailed with Alexander and Einstein, and who knows, maybe I should have. I just don't think a lot of people are going to follow that. I hope I'm wrong, that more people do try and follow that more specific advice. So I'm going to take a look at, just trying to be bigger picture. Ideally, some of the software that's being released already has currency pairs that it's optimized to trade on, whereas other software like an Einstein or Alexander, it can trade on any currency, some obviously more risky than others. So you want to just be real careful into what pairs you choose. So I'm going to let, at least for the next few weeks, not necessarily next week, but going forward, I'm going to let the developers kind of guide us into what their thinking is as far as what they look at in currency pair, yes or no, for long or short. And then I'll be able to echo what they do, as long as I think it fits within the parameter of something that's doable for a subscriber. I've tried real hard the last, 5+ months. I've been captaining the ship here to, speak in generality, speak from a macro perspective, speak in simple language, because the vast majority of traders out there are fairly new to this, and maybe they understand a candle chart, but not a lot of the other stuff related to looking at a particular chart, something that's zooming out of a cup with handle, like you may see this pattern that I'm outlining on the screen. This is a cup with handle. It's a very powerful pattern long term. We broke out of that. So in this particular case, as I mentioned multiple times through these weeks, I would not have been taking shorts. Okay. Why? Because we broke out and we're going to trend up to the next area of balance, which we've been doing for quite some time. I do expect us to break out of this balance on the euro going forward. Okay. And I'll be bringing as I see fit. I'm probably going to take GBP, NZD out, and enter some other currency pairs in here. But the discussion's not going to be the same. The chart patterns are all readable from a daily. You can even dive down into, a smaller, like a 4-hour window. It's not telling us much because much of the software trades based on daily charts. So I try to stay away from really diving down into smaller time frame stuff. Want to keep it big picture on the daily. But you can always go backwards to a weekly, right? Because this shows you where bigger support and resistance level lies with bigger pockets of candles. And this will help in maybe fine tuning, as San was showing the other day, what to do on the charts relative to their movement. Something breaks out, like we saw again on the daily here. If I was an Alexander, I probably would not be accepting shorts on the way up. I'd wait for some sort of pullback and be accepting longs on this trend up, right? So this is just one pattern. It's just one currency. There's a lot of others out there. There's a bazillion other patterns that form. So let your heart not be troubled. As I say, you don't have to memorize all these patterns. I think that at the bare minimum, if you can pull it off, just watch and get some guidance. And I think that I like that some of the developers are starting to summarize it, if you will, if you don't want to watch through the whole video, but just give a guidance on yes, no on each currency. Instead of having to go through the video, you can jump on their Telegram channel like for Variable, and just actually see what they throw out. Now, again, I'm not recommending that, because if you're not doing a lot of trading this week or certainly next week, I would say arguably you guys have more time to look at some of this stuff, catch up on the setup videos, go in and see a Days A Duncan's Forex basics course if you haven't been through that. A lot of this you can just listen to while you're driving in a car. You don't necessarily need to watch a video screen, just listen to the audio portion. So let's get off the soapbox and let's go into USDJPY. Again, we've been stepping down with this. You can see these red and orange support and resistance points as we step down. The green is a trend. So essentially we're coming to what appears to be right the edge of that. So if we were to break below that, we're probably going to extend all the way down to the high 103 area. So in this particular case, if I was trading USDJPY on a manual alerts type system, I probably would not be accepting a lot of longs if we broke this area, right? It's a short-term suggestion, but I'm trying to get you guys in tune to more how my thinking works on the chart. All right, so Euro JPY, again, I've got the same pattern overlaid. This is our squeeze zone indicator, and it's helping us to at least frame the markets. Keep in mind, I do talk a lot about framing the markets in much of my futures discussions, in many of the both seminars I've done for these live as well as webinars I've done in the past. It's really just talking about how to frame markets from the perspective of aggregating information in the brain that'll help to recognize patterns. In the repetition of going through this over and over again, this will begin to come more of a motor skill for you, which just helps you decide on, should I be accepting longs or shorts that are coming flying into my phone. All right, so here's gold, GBP NZD. This is getting kind of down near the danger point too. So if you're trading this thing next week, which I would highly advise against, I mean, it could just be wildness. Honestly, guys, I hope I'm wrong. I hope nothing happens next week, right? I hope it's a smooth election for all the different seats that are up for re-election. I hope the counts go well, right? I think we all probably hope for that, unless you're some crazy person out there that wants chaos. But we have to prepare from a risk standpoint for the opposite. I'm always looking, as I tell a lot of clients, if I can't find anything wrong with something, and I dig really hard, kind of like when I first joined Auvoria, couldn't find anything wrong with the program. I knew there was going to be hiccups along the way. Welcome to a startup, right? But I was okay with that. I have patience for that. But if I can't find anything wrong with the overall process, I usually buy it. Okay. Kind of like the big purchase we put in Zoom and clients' accounts back in the spring. Of course, the stock was overpriced, right? I bought it at $100 a share. It was almost against everything I go for in investing in things for clients. But I had a feeling the thing was going to be a screamer up to 200. I had no clue. I was actually completely wrong that the thing ripped to 500. Now it's ridiculously overpriced, right? I would not be buying Zoom at all, period, unless the thing got cut in half. It certainly could happen. So with that aside, just The other thing you want to take a look at in the next week, and I don't really talk about this much, but I think this should be brought into the discussion, is the VIX. Okay. Now, obviously, this is a little more for the equity thing, but when the VIX gets up into nosebleed levels, volatility can spill over and become correlated into any market, whether it be commodities, oil, whether it be the metals, any of the metals, gold, silver, palladium, right? Any of the liquids, nat gas, any of the other types of hard or soft commodities. This can be a real rager as far as volatility spiking. So if volatility is all over the place like it was back in the spring. So this is something I use heavily when I'm looking at equities, and to a lesser degree the forex markets. But it's sort of an indicator, if you will. This is not something that you trade unless you want to get an ETF form, but it helps you understand volatility associated with it. So I think, is there anything else I want to comment on? Here's the calendar again. So this is the calendar next week. We're getting a bit ahead of ourselves here. Let me just sure I get this filtered out. So let's take a look at the calendar. If you guys can see, we're on the 27th. I would try, if at all possible, to have all trades closed out on the 28th or 29th. Okay. And I would not be taking any trades next week. So if you're looking at the calendar that I'm showing here, I do note that Europe did switch their clocks back for the fall. The U.S. does it on the 7th. No, I'm sorry. U.S. does it this weekend, right? No, the 1st. So into Saturday night, Sunday morning, the 1st of November. Do remember clocks go back, which stinks. And still want to note, if in fact, forget that. I'm not even going to say that. So just moving into November, I wouldn't even look to start trading again to 8 or 9. I would not, of November 8 or 9th. I would not be trading these days if we got a contested election, guys. I wouldn't be trading this whole week. Why? Because it's going to bring raging volatility into the markets. Again, it could be wrong, right? But I'd rather err on the side of caution, putting everybody their powder dry, if you will, than throwing us into a ring of bananas, right? I just think it's a smarter move. You're going to see a lot of professional institutional investors that are very low on risk this time of year. Many of them are trying to protect portfolios they've made a whole bunch of money on this year. And for those in that particular position right now, which I know a bunch of you guys are, just view it the same. You're protecting capital instead of going out and exercising what's called FOMO. So I think I'm going to shoot a video on this. I know I got a couple of videos to finish up for our onboarding group, which I've been a bad boy on getting those done. But I finally got all my cameras straightened out in the office. So, and by the way, get this, guys. I'm going to show this to you for anybody who has any interest. I really thought this was super cool. This is unrelated to anything, but look at right here. This is called IV Cam. And for anybody that has, I'm pretty sure it works evenly on iOS and Android. But I downloaded this on the brand new S20 I just got. And man, this is just absolutely slick. So I'm going to go live on Saturday with this. And I'm basically using my phone, which is a fantastic camera on it, as my webcam. And it's much, much better than even the expensive webcam I bought. Even the microphone sounds better. So if you guys want to take a look at this, you download the app from the App Store, and then you put the software on your desktop or laptop, and you connect a USB cable so they can sort of, integrate, communicate, what have you with each other. And then you unplug the USB cable and you see yourself on your screen. It works with Zoom. It works with all kinds of stuff. So it's pretty slick, and you don't have a whole bunch of cables, and you just got to find a way to connect your phone to, in this case, I'm going to use a tripod, or you can connect it to the back of your screen. There's clips and stuff you can get, but you have like a killer webcam. Pretty cool. Anyway, so that's the Forex calendar for next week. You guys know where I stand as far as risk. That's pretty much everything I want to say. Let's go into some Q&A. So Dasan sent us on variable Telegram great summary of how he was going to trade on variable this week. Yeah, that's true. Do keep in mind that what I'm going to recommend, and it, I'm not in control of the developers, guys. These guys are their own, they're their own bunch. They're a very smart group. They may not be familiar with how to present in large format as I've done for damn near a decade. So I'm going to talk to them about, just sort of speeding things up because it has a tendency to go kind of slow in some cases. But I'll teach them how to sort of speed it up and, get like to the meat really quick. And if somebody wants to stick around and listen to the rest of it, like I drone on occasionally, sometimes they can, but at least you're getting the quick hits and obviously have the summary posted, right? So I'll go in and do that. And let me just see. So I'm getting a request. Let me just switch over while I'm gabbing away here. I'm going to share that Insights call screen again here. So this is the weekly Software Insights. We've got our man T-Mac on Fridays. Remember, these are Eastern times, guys. So 11 a.m. Eastern time for each day. Somebody said that they registered for the Sunday one, and the time was changed. I don't know about that. Might want to verify that again. If we're seeing that as a common problem, I can have the team correct it, or we can have Killian. Killian's a man, and wait till you guys see. I've been having a much closer dive on Stratamus. This thing trades on like one currency, you guys. It's the freaking Euro Singapore dollar. It's a whacked out miner in currency land. This thing's got some great win rates. And I'll be sharing some stuff, including some FX Blues on live accounts for this. It's all verified stuff, just like the MyFX book, just with a different website. You can use either site, by the way. So, yeah, you're welcome, SF. Yeah, this app's killer. It's actually brand new. So I think it's been around, hell, I don't know, 3 months, if I'm not mistaken. So Gearbox is, I haven't paid enough attention to what's going on. As you guys know, I've tried, and maybe this seems like not a risk manager thing, but I've just wanted them to get past the hiccups, which are inevitable in the startup of any organization, especially if you're looking in, all those venture capital startups, which essentially is what this is, right? It's going to take a couple weeks to iron stuff out. We're going to find stuff. And the great thing about this team is that if you guys have problems with anything, please make sure you go to the back office Zendesk to open up a ticket. And as much as you may want the bat phone to one of your colleagues, we need the data collected from the Zendesk. So, I mean, the help desk serves two huge functions in any company. From a risk management standpoint, it helps whoever fix problems, right? Reduces risk if you fix problems. But more importantly, from a corporate standpoint, is it allows us to collect data on what's going wrong. So the more we get the tickets opened up using the normal process of opening up a back office Zendesk ticket, allowing Patrick and his team to get on it, the better off we are as a group. So sort of force your people to open up a ticket for stuff. You don't really have to open up tickets for like questions. I mean, you can ask, Dasan those questions. You can ask T-Mac the questions. You can ask Killian when everybody gets up and live. But my expectations, just because I've been through the ringer in trading system software releases, not necessarily from an EA standpoint, but certainly in futures land, they're almost as inevitably, there's always getting past that first hump of fixing software updates and so forth. And keep in mind, I don't know that there's a piece of software on this planet that doesn't continually go through updates, right? It's just it's an ongoing process of continuing to refine the product. All right. Yeah. Dr. Jeffrey, that hold on, but I'll tell you, if you put a ton of money in Zoom, my man, I would take some off the table. Yes. So if you guys have access to TradingView, all you got to do is go into indicators, and in the search window right here, just type in squeeze zone, and then you can overlay it on your charts. That makes sense. I'm hoping Gearbox is released this. So, and the call I got, obviously, the question I just got was, would you let a demo account run? Yeah, of course, I would, because you're playing with the house's money, right? So it's like you walking into to play craps, and the Mirage gives you a marker for 5K, right? So I'm always happy to play with somebody else's money, right? Just to see how it runs. Who knows? I could be wrong. There could be no volatility next week, right? So assuming the election is decided on 11/3 without being contested in the courts, what do you think happens in Forex if Biden wins and if Trump wins? I don't know. Honestly, at this point, I don't know that anybody, I mean, there's a lot of talking heads out there on Fox Business and CNBC and Bloomberg, and, they're all out there blapping on that. I don't know that I'd want to put my foot out there and explain what happens. Just understand this, regardless of who's in the White House, it only becomes a problem from an unknown standpoint to capital markets if one side has one in massive power over the other. Does that make sense? So if the executive branch of government goes to a new administration, Biden's, but the Senate stays to the right with a slight majority, it's going to be a deadlock government. Nothing is going to get done. So the House, if it stays left, will throw bills at the Senate. They'll pass nothing. And then Biden will be able to sign no major legislation. Any legislation that gets done is going to have to be done by executive order, okay? Which rarely can promote big global upsetting, conservative and or socialistic agendas one way or the other, right? The big stuff's got to be passed by both the House and the Senate, signed by the executive branch of government. So from a monetary standpoint, as a fund person, remember, I always think you guys to think like an institutional investor, right? You want to look to see if one side has undue power. Now, if for some reason it goes all left or all right, I still think there's going to be volatility in the markets. But from the standpoint of the equity sides of the markets, maybe not as much Forex, because many of the underlying currencies and their true value is based a lot upon the debt levels of the parent country. Okay. Or looking at a different way, the money supply flows, which could differ based upon quantitative easing or tightening by central banks. And in the end, what's called M1 money supply, you can Google if you want to know what the name is. This is always an area I joke with my daughter and some of her friends who are getting ready to go into college. If you pay no attention to anything in business at all, maybe you hate business, at least take a macroeconomics course and pay attention, because you will use everything in that course for the rest of your life from the standpoint of your investing portfolio, or just understanding just a macro view of economics and how it influences everything, because it does. So maybe that's not the best, that's not the most poignant answer on that, but I would say hold off on that. Let's see what happens, and then I'll be able to talk a lot more educatedly about what could happen. Got to try and stay away from forecasting. Although I do think if the left grabbed power of all three branches, I'm pretty sure the equity markets are going to go insane, because a lot of the capitalistic and low restriction type of policies are going to be wiped off. I don't know. That's typically what happens. Although there's always arguments from both sides, like, hey, the bottom line is that for an equity investor in a 401k or some sort of retirement accounts or Roth or whatever you guys use over in other parts of the world as retirement plans, which is probably similar structure to what we use here. The key thing to any financial plan is if you're earning money every year, or a decent amount, put money away in the retirement accounts. Make sure you max it out. You're paying yourself first, folks, right? In many countries, there's no tax on that stuff going into whatever the retirement plan is, right? So if it's a 401k, but at the bare minimum, if you don't have a plan at your place of employment, you can always open a Roth IRA if you have income, right? You can put up to 5 Gs in that thing, or a lot more if you're older. So it's free money. It goes in free. You can open a brokerage account at TD Ameritrade and accomplish the same thing, or Vanguard, or wherever you want. I'd stick to the 4 discounts, that have, actual branches, like a Fidelity or Schwab. So TD and Schwab are merging, so TD is probably going to go away, but they'll keep all the branches more than likely. But looking at, going forward, I mean, the basic financial advice I give to all young people is don't spend too much. Don't load up credit cards with debt. Live above, I should say, live below your means, but invest above your budget. And it could be something as simple as putting in, $5,000, $2,000, $3,000 into a Roth every year in your early 20s will give you a significant advantage. And then obviously anything above and beyond that, you can fund a brokerage account, you can fund a Forex account, begin to trade. Who knows? Maybe the profits from variable will be so insane for some of you guys, it'll allow you to fund these other accounts. So you're going a reverse direction, right? Essentially, you're working to build a Forex account first. Just make sure that the capital inside the account you can afford to lose, and a lot of people are like, yeah, I can afford to lose it. Right. They don't think about it, right? Because they think it's just going to go up and then it goes down, or they make some mistake, or they have some sort of software they don't change on or follow up on the settings, and then the account gets blown out. But just understand this. I mean, loss is a part of trading. Everybody that has made it to the billionaire status, I don't care who they are, if they are self-made and it came from investments, they had losses. In some cases, big ones, real big. But the vast majority of those that have taken those losses, even though they've been smaller investors when they first started, they were able to pick themselves back up, dust themselves off, learn from it, don't lament on it, right? Don't harbor resentment against it, because that is one of the most negative and destructive forces in all of investing is the regret. Okay. I could have done this. I could have done that. Well, I blew all my money. And, I've met people that have blown $500,000 and, they came back from it, right? They learned from it. They didn't make the mistake again. Heck, the client the other day I met, I went out and just invested in some crazy limited partnerships. These things were flying all over the place in the late 80s and early 90s. And most of them was just fraud. And he dropped $500K into a real estate investment partnership. And it evaporated on him 4 years later. Most people would have been devastated by that loss. People that lost their restaurants in the last year, right? But a lot of the smartest ones will just pick themselves back up. Yes, it's tough. But you can either be at the bottom of a bottle of Jack Daniels, or you can get up and do something about it. So, and as they say, what are the percentages? 10 versus 90, 90% of your life is shaped based upon how you react to the 10% that's really bad, right? So whatever that formula is, the point is just, learn to deal with loss, save up until you can fund a live account, run a demo first, and all that fun stuff. So there's your free Tuesday financial planning discussion. So if anybody's got any questions on that, but we're waiting to find out about Gearbox. I don't know the exact answer to any of that. So if anybody's got any last and final questions, let me know. Let me check a couple of these things. So one of the Q&As is unrelated to Forex. If you guys are in the US, you can open a Roth IRA depending on what kind of income you have. just Google it for your age. There's the whole grid out there that shows. But you can open up a Roth IRA anywhere. And by the way, guys, the money that goes into a Roth, it's not deductible, but who cares? That you never have to take it out, and it completely grows tax free. And yes, I have met people that have built Roth accounts up to 600-700 grand just by rolling over. Used to be able, it was this period of time back where you could convert an IRA, and to a certain degree, you still can. Just depends on a bunch of factors. So you want to look that up. You can convert. Yes, you're going to pay tax on the IRA to a Roth, but you never have to be forced by the IRS to pull any money out of a Roth ever. And a Roth grows 100% tax free. So it is one of the most beautiful concepts, along with compounding, that exists for the U.S. residents. I don't know if you guys have something similar to that overseas. It'd be interesting to know if that exists in the Eurozone. Maybe it does. But if that type of vehicle exists, I would be pouring in the max every year if I could afford it. Some years you may, some years you may not be able to, but make sure you get those types of accounts funded along with whatever you're doing outside in non-retirement accounts or Forex. So anyway, that's good. So that is the time. Make sure I'm showing that screen. All right, so for the question I just got on, it's the S&P 500. Don't have any predictions here, guys. Although I do expect a pretty big correction depending on when the music's going to stop and how many chairs are left over for the investors to sit on. We won't have any clarity on that for probably a couple of weeks after the election. All right. My name is Steve Vetterl. I host these calls Tuesdays and Saturdays at 10 a.m. Pacific time. Do the conversions for your part of the world. I do wish everybody well. We will see. Is that what it's called, Jay? ISA? ISA for the UK. Okay, cool. Yeah, that's good. So I don't know. I mean, if you guys want to just keep filling me in on what goes on in the Eurozone, the bottom line is I can almost promise you guys they have a Roth type IRA account. And this is Senator Roth. He's one of the guys that probably one of the smarter bills that's ever come out of Washington. But in any case, there's all different types of accounts out there. But the Roth IRA for U.S. residents, I would open in, one of the 4 big brokerage firms, not the full service guys, but you can open up at a regular brokerage firm, like a Schwab or Fidelity. Fidelity's my old stomping grounds. I used to be one of the branch reps way back in the early 2000s in Fidelity. It was actually an FR4 in the firm. So I dealt with a lot of high net worth clients when they came over. I was in the Philadelphia office. So it taught me a lot. Fidelity's a fantastic place to have worked, I'll tell you. It's a great resume builder. They are a rock solid organization. All right, so I'm going to off the mic here. Everybody have a great week. May the trades be with you.